Viewers of our World Portfolio series will know the importance of diversifying your portfolio across the entire globe, giving yourself the best chance to benefit from exposure to growth markets and ride a wave of global prosperity.
The World Portfolio that we constructed in episode 2 of the World Portfolio series from just 7 core ETF index tracking funds invest in all the key global geographies and across all major sectors including financials, health, technology and energy.
It also has holdings in REITs, so you benefit from an exposure to commercial property markets, and, in the expanded version, commodities, the stuff that underpins inflation.
Today we're peeling back the cover on the Money Unshackled World Portfolio on free trade and showing you exactly what you are investing in when you buy these 7 core ETFs as a percentage of your portfolio. Then we'll tweak the portfolio by adding 5 satellite ETFs to really make this baby pop.
We're so pumped for this one. Let's check it out.
Welcome to MoneyUnshackled.com, the investment and finance channel and website that sets you and your finances free. I'm Andy, this is Ben, and if you like what we say, hit the like button and click subscribe.
This episode is the third in a series on the Money Unshackled World Portfolio, which we've built on the zero trading fee platform Free Trade. If you want to emulate the World Portfolio, then sign up to Free Trade with our link. By using our link, you'll get a free stock worth up to £200. You'll find the offer along with many more on our website at moneyunshackled.com. We'll put this link in the description below. Let's get into the video. World Portfolio Overview. To recap on episode 2, we had selected 7 ETFs that nicely covered the world in as few ETFs as possible, keeping the balance between simplicity and portfolio weighting. We included ETFs that covered the USA by 35%, the UK in both the FTSE 100 and the FTSE 250 by 15% combined, Europe by 15%, Asia Pacific by 10%, Japan 10%, and the emerging markets by 15%.
Let's see how that translates into an actual portfolio. Throughout this video, we've used a portfolio size of £2,000 as an illustration, but of course, this portfolio would perform similarly if your pot was smaller or bigger than this. You'll notice that because we're buying actual units and not just talking theory, that the total is a little different to £2,000, as close as we could get while keeping the weighting we wanted.
The real world necessity of buying units makes our actual allocation slightly different to target allocation. But do we really know if 35% or 33.9% was the right weighting to pick until decades from now anyway? And check out that weighted average ongoing charges figure for the whole portfolio. At just 0.11%, this simple world portfolio is a fraction the cost of even the legendary Vanguard Life Strategy funds, which would clock in at 0.37% if you included Vanguard's platform fee. Of course, Free Trade has no platform fee and no trading fees.
We looked under the bonnet of each of these funds to see what actually was inside them. For example, 4% of the FTSE 250 fund is actually a geographical exposure to the US, and 25% of the European fund is actually exposure to the UK.
Geographies, basic portfolio. This is the portfolio of 7 ETFs broken out by geographical region. You see, we have applied the actual weightings from earlier, and the figures in the table are as a percentage of the portfolio. Down the left here is true split by country and region within our portfolio. Look at Europe for example. Just below the arrow here at 12%. This means that 12% of our whole portfolio is in European countries, despite what ETFs we have bought. 11.7% of this is coming from a dedicated European ETF, even though VEUR is 16.1% of the portfolio, and there's some European exposure in the VMID and VUSA funds too.
When we were setting out the ETF weightings, we purposely chose to buy 15% of the Europe ETF and an equal 15% across the UK ETFs, because we wanted more of our money in the UK than in Europe, knowing that there was some UK exposure hiding in the European fund.
So here is what we are really investing in by geography. Pretty good spread. Now, let's look at sectors.
Sectors, basic portfolio. Now this is what we're really interested in. You can get a basic understanding of what geographies you're getting exposure to by the fund names, but not the sectors. We wanted to find out the true weighting by sector in our portfolio so we could tweak it to reflect our predictions for the future.
Here it is, the split by sector on the Money Unshackled basic world portfolio of 7 ETFs. Now we can see the detail. We see things like how the USA ETF has the bulk of the portfolio's tech sector exposure and also with financials, while the bulk of our REITs are in the Asia Pacific ETF, and most of our consumer product exposure comes from emerging markets. Awesome!
Here is our basic portfolio summarised by sector. It looks good, but we'd like to be able to tweak it, so let's do that. We think healthcare will be a crucial sector as the world's population ages and gets richer, so we want to boost the weighting there. REITs might be considered low at 4.3%. We want to boost that to around 10%, and there are no commodities in the portfolio other than proxies. We want some gold in our portfolio, not too much as gold pays no dividends, but gold is money in its purest form and is a good recession hedge. We'd also like some exposure to oil, gas and other energy commodities, but we get this in proxy via the energy, utilities and basic materials sectors, which already make up nearly 15% of the portfolio.
The expanded portfolio. The beauty of using a free trading platform like Freetrade is that you're not constrained to having to stick to the simplicity of just a handful of ETFs like you would on a traditional platform. The fees aren't there to stop you.
Normally, investment platforms charge you trading fees to buy and sell ETFs, stocks and funds, so you'd want your portfolio to be as compact and concise as possible. Free trade removes such obstacles and means we can add on some so-called satellite ETFs which orbit around our core world portfolio without incurring any trading fees.
Right, let's do some tweaking. We wanted to boost REITs, boost health and add gold, so we've added these 3 ETFs to the portfolio. We're also interested in small caps, which are small listed companies as they have the best growth potential. And we want to make sure we're invested in the technology of the future, so we've added a robotics ETF.
To fit new funds into the portfolio, we need to tweak the target allocations. The core portfolio has been squeezed to 77.5% of the total, leaving 22.5% of room for the satellite funds in dark pink. This in turn changes our actual allocation when we go to buy the actual funds. This weighting can be changed and isn't set in stone, but a small tweak to change the sectors can have unintended consequences on the geographies and vice versa. We've carefully balanced the allocation to get the best out of both, as we'll come to shortly. And look at that weighted portfolio cost. It's bigger than before, but still minuscule at only 0.17%. It's barely there at all.
Geographies, expanded portfolio. Let's look at how our fiddling has affected the geographical split. ISP6 is the small caps ETF and it is all in the USA. Next, IWDP is our REITs fund and is also predominantly US located, as is IHCU, the health fund, and RBTX, the robotics fund. For this reason, we slashed our core USA ETF down by 12% in our target allocation to make room for these satellite additions to the US region. The SGLN fund tracks the price of gold and is not in any specific geography.
Now look how this compares to our basic portfolio that consists of just 7 core ETFs. USA is pretty much the same, but now includes small caps and doesn't only include the large S&P 500 companies as before. The other regions are pretty much the same too. Asia Pacific down by half, but this region of the world, which includes developed countries like Australia and New Zealand, is perhaps less interesting than the emerging markets, which have gone up a bit. And we now have gold commodities in our portfolio.
As gold's value is fairly speculative and it doesn't pay dividends, we don't want to hold more than 5% in our portfolio, but it's worth holding some. Bitcoin and crypto blockchain ETFs are not yet available on the free platforms, but gold acts similarly and is in many ways a safer proxy. The famous Bitcoin boom that got everyone so excited happened in 2017, in the past, and yet still people are wanting to jump on the bandwagon. If you did want to invest in Bitcoin or cryptocurrencies, you could of course invest in this as well outside of this world portfolio.
Sectors, expanded portfolio. Of the new funds, we see that small caps, ISP6, are spread across all sectors. We see that IWDP is indeed a REITs fund and contributes 6.3% of REIT awesomeness to our total portfolio. The healthcare fund, IHCU, does what it says on the tin, and robotics, RBTX, contributes 3.2% to the technology sector.
To summarise, our tweaking has meant that the technology sector has come down a bit, but largely held at over 20% of our portfolio. It fell because we had to reduce the core USA ETF, the USA, to accommodate the satellite funds, as the USA would be too much of our portfolio otherwise. And most of the world's tech is in US companies. We replaced some of this lost technology with future tech in the form of robotics companies, which we find more exciting for growth.
We boosted the healthcare sector by nearly 2.3% of our portfolio to account for the ageing population, and we bumped REITs up to nearly 10% of the portfolio. REITs are awesome as they perform better than average stocks recently and pump out cash dividends. We felt the basic portfolio was lacking at just 4.3%. Better to have closer to 10% we think, and of course we've added gold commodities.
What? No bonds? Most ready-made portfolios, including 4 out of the 5 Vanguard Life Strategy funds, and most of those plugged by financial gurus, contain bonds. We hate bonds.
Quite frankly, they're boring. They rarely perform as well as equities, and their function as a cash flowing asset can be substituted with peer-to-peer lending, which pays great interest and has awesome sign-up bonuses. Plus, bonds in a portfolio are another layer of complexity when you're trying to carefully tweak your equities by geography and sector.
Far easier to say, this collection of ETFs is my equities portfolio, and this cash over here separately pays me interest from peer-to-peer accounts. Conclusion: a world-owning portfolio. So there you have it. What we've just walked you through is actually my personal portfolio. The pound amounts are different, the percentage allocations are the same. If you want to copy my portfolio and own the world, feel free. We've put hours into balancing this baby, but now the work is right there, done for you. We'd love to know if you do want to copy it, and let us know in the comments section.
Just download the free trade app using the link on the offers page of moneyunshackled.com, where you'll also be given a free share worth up to £200 when you use this link and open an account by depositing £1 or more, and start owning the world. Thanks for watching! On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.